Welcome back to our channel. Today, we're diving into the world of real estate investment, and we've got a lot to cover. So, if you're ready to explore the best ways to invest in real estate, you're in the right place. Real estate can be an excellent way to grow your wealth and secure your financial future. Whether you're a seasoned investor or a beginner, this video will provide you with all the essential knowledge and strategies you need to succeed in the world of real estate investment. Remember, this is not financial advice. 1. The buy and hold strategy. The buy and hold strategy involves purchasing a property with the intention of holding onto it for an extended period. Instead of flipping or selling the property quickly, you become a long-term landlord. Here's how it works. Property selection. You begin by carefully selecting the right property. Location is crucial, as you want a property in a desirable area with good potential for appreciation. You also consider factors like property condition and potential rental income. Financing. You secure financing for the property, often through a mortgage. The property's rental income should ideally cover your mortgage payments and other expenses while leaving room for profit. Renting the property. Once you own the property, you find tenants to occupy it. Your goal is to maintain consistent occupancy, ensuring a steady rental income. Property management. As a landlord, you'll be responsible for property management. This includes property maintenance, handling tenant issues, and ensuring the property complies with local regulations. Long-term growth. Over time, your property's value is likely to appreciate. As you continue to collect rent and pay down the mortgage, your equity in the property grows. The buy and hold strategy offers several benefits. Steady rental income. Owning a rental property provides you with a consistent stream of income. This can help cover your expenses, including mortgage payments and property management costs. Property appreciation. Historically, real estate tends to appreciate over the long term. This can lead to substantial wealth accumulation. Tax advantages. As a landlord, you can benefit from tax deductions related to your rental property, such as mortgage interest, property taxes, and depreciation. While the buy and hold strategy is a proven method, there are considerations and risks to keep in mind. Property management. Being a landlord involves responsibilities and time. You'll need to handle tenant issues, maintenance, and property upkeep. Market fluctuations. Real estate markets can fluctuate. While properties tend to appreciate over time, there may be periods of slower growth or even depreciation. Financing risks. If you finance your property with a mortgage, there's a risk associated with interest rate changes. Rising interest rates can affect your cash flow. Tenant vacancy. If your property experiences extended vacancy, it can impact your income. It's crucial to have a plan for tenant turnover. Before we go to our second strategy, remember to like the video and subscribe to the channel. 2. REITs. Real estate investment trusts are investment vehicles that own and manage income-producing real estate. They provide a way for investors to access the real estate market without buying and managing physical properties themselves. Here's how they work. Portfolio diversification. REITs own a diverse range of properties, which may include office buildings, apartment complexes, shopping centers, and more. By investing in a REIT, you can effectively diversify your real estate holdings. Passive investment. Investing in REITs is a passive activity. You purchase shares in a publicly traded REIT or through a private REIT, and the REIT's management team handles property selection, management, and maintenance. Steady income. REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. This means you can receive a regular income from your investment. Liquidity. REITs are traded on major stock exchanges, providing liquidity. You can buy and sell shares as needed, unlike physical properties, which may take time to sell. There are several types of REITs, each specializing in different types of real estate. Some common types include equity REITs. These REITs primarily own and manage income-producing properties, such as apartment buildings, office spaces, and shopping centers. Mortgage REITs. Mortgage REITs invest in real estate mortgages, providing financing for real estate transactions. They make money from the interest on these loans. Hybrid REITs. Hybrid REITs combine the characteristics of both equity and mortgage REITs, offering a mix of property ownership and mortgage investments. Investing in REITs offers several advantages. Liquidity. You can buy and sell REIT shares on stock exchanges, providing liquidity and flexibility. Steady income. REITs often generate consistent rental income and distribute it to shareholders in the form of dividends. Professional management. REITs are managed by experienced professionals who handle property operations and investment decisions. While REITs can be an attractive investment, it's essential to consider the potential risks. Market sensitivity. The value of REIT shares can be sensitive to interest rate changes and market sentiment. When interest rates rise, REITs may experience share price declines. Lack of control. When you invest in a REIT, you don't have direct control over property management decisions. Taxation. REIT dividends may have different tax implications compared to other investments. It's important to understand the tax treatment of your REIT income. Diversification. Although REITs offer diversification, it's essential to assess the specific properties and sectors in which a REIT invests. 3. Real estate crowdfunding. Real estate crowdfunding is a method of pooling funds from a large group of investors to collectively invest in real estate projects. Here's how it works. Online platforms. Real estate crowdfunding platforms have emerged to connect investors with real estate developers or operators. These platforms showcase various investment opportunities. Diverse projects. You can invest in a variety of real estate projects, including residential and commercial properties, development projects, and more. Investment levels. Real estate crowdfunding allows investors to participate in projects with relatively low minimum investment amounts, making it accessible to a wide range of investors. Hands-off investment. Crowdfunding investors typically play a passive role, leaving the day-to-day management of the real estate project to the professionals. There are different types of real estate crowdfunding. Equity crowdfunding. In this model, investors buy ownership stakes in the project. They share in the project's profits and losses and often receive dividends or a share of the rental income. Debt crowdfunding. Investors provide loans to real estate developers in exchange for interest payments. This model resembles lending money to the developer, and investors receive interest on their investment. Real estate crowdfunding offers several advantages. Accessibility. You can invest with relatively small amounts, which makes it accessible to a broader range of investors. Professional management. Real estate crowdfunding platforms typically partner with experienced professionals who manage the projects. Transparency. Platforms often provide detailed project information and updates to keep investors informed. While real estate crowdfunding has many benefits, there are also considerations and potential risks. Project risk. Real estate projects carry inherent risks. It's crucial to carefully assess the details of each project and the reputation of the developer. Lack of control. Crowdfunding investors usually have limited say in the project's management. Market risk. Like all real estate investments, the crowdfunding market can be influenced by market conditions and economic factors. Liquidity. Real estate crowdfunding investments are typically illiquid, meaning they cannot be quickly sold on a public market. If you found this information helpful, please give us a thumbs up and subscribe to our channel. Remember, the key to successful real estate investment is knowledge, so keep learning and growing. We wish you the best of luck in your real estate investment endeavors. Thanks for watching.